Nilesh Parikh, Associate Director, Wholesale Capital Markets at Edelweiss, joins in to talk about what he is expecting from SBI. Nilesh, hi, morning. Your expectations on margins? Do you see margins to dip sequentially?
We're expecting about 6 to 7 bips decline on margins for SBI. So largely from 3.17, we're expecting it to settle closer to 3.1 during the quarter.
Nilesh, for SBI, for the quarter gone by, slippages were very high at about 13,700 crore. So what do you expect in terms of slippages from SBI for Q2?
So Q1 typically we've seen historically slippages numbers are elevated for SBI, and from there on Q2 it kind of moderates. So we're expecting slippages to be closer to about 9,000 crores during the quarter, lower than the 13,000 that we saw during the first quarter. But including the restructuring, the stress asset formation will continue to remain elevated for SBI.
So do you see high restructured assets pipeline?
So pipeline, what they had mentioned in Q1, at the end of Q1, was about 10,000 crores of assets which are under consideration of for restructuring. But considering that most of that would probably happen in the fag end of the year, we're expecting somewhere around 2,500 to 3,000 odd crores of restructuring that they will complete during the quarter.
How do you see the stock to react if asset quality improves marginally?
Yeah, so I think it's largely in expectation that asset quality both on gross and including the restructuring will remain elevated, but yeah, better than Q1 levels. So our expectation is that if and on margins also, if the numbers hold up, then there could be a positive bias for SBI on the stock performance post the declaration of results here.
And what's it that you're expecting from credit and deposit growth?
Yeah, so SBI has been a key beneficiary of the pickup in credit growth that we saw in Q2 as this demand shifted from the money markets to the banking system. And SBI, our sense is that SBI, we are expecting close to about 20% credit growth and about 15 to 16% on deposit side. You're right, Treasury has been a drag this quarter given that bond yields have remained elevated. Our expectation on Treasury losses for SBI is about 5 billion, about basically one third provisioning that they will do this quarter, and that number is somewhere around 5 billion for this quarter.
Nilesh, appreciate your time and thank you for joining us. Devesh, what could be the next big trigger for Indian markets?